Hello, welcome back. We're on day 3, and our first interview of the day is with the legend Rob McEwen. We haven't actually spoken to Rob in about 2 years, so Rob, welcome back.
Thank you, Peter.
Why don't you give us an update as to how the last 2 years have treated you?
Well, in the mining industry, we've seen an improving gold price and an improving copper price, so that's pretty good. We have a very large copper project in Argentina, and recently there is a newly elected president that passed some legislation that is inviting large foreign investments into the country. And that's really, really positive. Because before that, Argentina was a place a lot of people said, well, you have a big deposit there, but too bad it's in Argentina.
Yeah.
Now we've seen BHP come along with Lundin Mining and do a deal worth over 4.4 billion. And we have a project that's in the same province. It's at lower altitude. It's a larger resource than the combination of the two. It's a higher copper grade. It's closer to infrastructure. And our implied market value of the private company who hold this asset in is $1 billion. And we're looking at, it's less than a quarter the value of that, and yet it has all sorts of site advantages. So that's good. The gold price is up. Our operations really went through a horrible period between 2019 and 2022. And they stabilized, and the production's going up, and the costs are coming down.
Good.
And the gold price is going up. So there's nothing to complain about.
Good. Okay. Yeah, because I think 2 years ago, the copper project, it was fairly new at that point, wasn't it? It was sort of just emerging as the next big thing, really.
For us,
for you guys, yeah. And I think it was around that time you did the deal with Rio, and things were getting quite exciting. You were talking about spin-outs and IPOs and things like that at the time.
Yes.
Why don't we just talk about the copper project actually, as it stands today? Why don't we just get a bit of a recap as to the scale of this thing?
The copper project, according to Mining Intelligence, is the 8th largest undeveloped copper deposit in the world. S&P has come out and said in the last 30 years, it's one of the top 20 copper discoveries made in the world. It's 37.6 billion pounds in all categories of resource. To give you a sense of scale, I convert it to a gold.
Yep.
So if I take the gold price and divide it by the copper price to come up with the number of pounds of copper to equate to 1 ounce gold value, this is equivalent to a 61 million ounce gold deposit. It's going to be producing gold at just over $600 an ounce cash cost. All-in sustaining cost of just under $1,000. Producing for 27 years, and that's only mining 40% of the resource we know is there. So it's, if you want to look at it, it's equivalent to all the gold that's been produced in the Timmins mining camp in Canada over the last 100 years.
Wow, okay.
So it's big.
Yeah.
And it's one of those projects that has just, the NPV's been increased by the results of the new legislation that's been put in place.
Okay.
So we're also, 2 years ago, I brought in an architect who's considered the Steve Jobs of the green living building space. And I said to him, help us redefine and transform mining in the eyes of the general public. Because mining has a bad rap.
Yeah, no, it needs to be transformed.
So we've looked at that and said, how can we be more sensitive to the environment? How can we create an environment for the workers that's more comfortable and attractive? And he's created just a wonderful image that this mine will be 100% renewable energy being used. Carbon footprint will be in the lowest decile, or 1/10 of what we're seeing conventional mines. It'll use less than 1/4 the water of a comparable mine. It won't have, because it's a heap leach process, there won't be any tailings to threaten downstream communities. CapEx is about $2.5 billion right now, and a 3-year payback, a 27-year life. And that's, as I said, it's only less than 40% of our mining, so it's multi-generational. We're looking to put a hotel there.
I was going to ask about this actually. So within the capex that you released with the PA, is that also including this vision of what the mine will be in terms of the green aspects and the hotel and the resort?
Not the hotel,
No.
but it is the accommodation for everybody working there. And if you can try to picture this large, well, first of all, they're going to terrace it much like the Incas did for gardening on the mountainside. Then they're going to enclose it in a large translucent structure with hanging gardens.
I think I saw a mock-up design at a conference a few months back. I'm pretty sure you have. Didn't one of your architects sort of create an image? I'm sure
Yes.
we'll be able to find that online. We'll put that on the screen for everyone to see right now.
We have a video. It's a 5-minute video if you want that. It gives you a sense of the landscape. It gives you a sense of the beauty of the area. And that's part of the thinking. You want to make mining transparent and easier for people to say, well, you know, the historical legacy of mining isn't good, but the mining industry in general is working very hard to be a good steward
Yep.
of the environment, and there are excellent examples of reclamation. And so we're hoping with this one that this would be one of the models for mines of the future.
Good. Okay. I think obviously we're at an investor conference, and I think that's a very important thing that you're doing in terms of changing the perception of mining and showing that it can be different, especially in public perception, because we do need a lot of metals and people need to support this industry. But in terms of the investment community, I guess their main focus is when's the mine going to get built, or how are you going to de-risk it? What are the next steps? Obviously, you've got the PA, you've got the economics, you've proven how large this thing is. What do the next couple of, I guess the next 12 months look like for you on the copper project in terms of de-risking this thing?
In the first half of next year, we'll be delivering a bankable feasibility study.
Okay.
It'll take about a year after that for getting all the engineering done before we put a shovel in the ground. We're going to put a shovel in the ground in 26. We'll be producing in late 29.
Okay. That's pretty aggressive targets there, because there's been some talk of, like, and not specific to your project, but you listen to someone like Friedland, or I've listened to him on a webinar recently, and he says, a lot of these things with high altitude aren't going to get built for decades, right? But you're saying that this is going to be essentially in production by the end of 2029?
2030.
2030, yeah. So, okay, so you've got the bankable feasibility study coming out next year, you're doing some more engineering work, and then how are you looking at partnering up or actually funding the project? Because the 2.5 billion capex is quite a lot. I know we're a little bit a while there. There's lots of new interesting ways you can fund projects, but I'm assuming really what you want to be doing with a project of this scale is working with someone like a major to help build it.
Well, there's a number of sources of capital.
Yeah.
There are export development corporations, sovereigns. There's equipment providers that export development banks do. We've been talking to a number of the international development organizations, and they're saying, okay, you meet our criteria, just show us your feasibility study and we'll get it on the file.
Okay.
So what makes our project attractive is we're low cost at $1.02 a pound. You're talking about better than the 75% gross margin.
Yeah.
The payback, while 2.5 billion, it's much less than if you put a conventional plant that produced a concentrate.
Yeah.
We'll be producing a product that can be sold and used directly by industry. So our capital it's lower than what you do with a conventional. And the payback is modeled to be in 3 years. And that's at 375 copper.
Yeah.
Copper right now is 411.
And what about transportation and logistics in terms of actually getting your product
To market?
To market.
We are about 120 kilometers into the Andes away from a highway that could take it to a port.
Okay.
We also are right on the border with Chile, and we've looked at connecting to their road system, and that That'd be about the same distance, 200 kilometers to a port of Coquimbo on the Pacific.
Okay, but okay, so you've got a couple of options. The additional infrastructure, I'm assuming you'll need some additional roads or things like that down the line. Is that already factored into the
We're going to
CapEx?
upgrade the roads
Yeah.
that we have. They're exploration roads. They're quite passable now. We'd like to bring one down. You have to go over 2 passes that are over 4,000 meters above
Okay.
sea level.
Okay,
And we'd like to get those a little lower.
yeah,
And we have 2 access points, a southern one and a northern one. And so we're working on developing both of those. And the southern one connects with Glencore's El Pichon deposit. And
okay. What about the permitting side of things? What's the process there look like?
we submitted a year ago, over a year and a half ago, permits for environmental, and we're hoping to get our environmental permit to build before year end.
Okay, so that's pretty quick turnaround.
Yes.
Yeah.
We have an office in the closest community where we've done a lot of training. We've actually trained about 10% of the local population
Really? Okay.
for drillers, helpers, drillers, equipment maintenance, and other aspects. So, and it's in a community that there's been a long history of mining. So.
Okay, interesting. And in terms of, how are you looking at yourselves at the moment in terms of the value? Obviously, there's a humongous amount of value on the ground, like you said, equivalent to 60 odd million ounces, right? So I guess on a market cap per ounce basis, what do you think you're sort of trading at currently?
We're at a big discount.
Yeah.
Well, I have $225 million invested in McEwen Mining and McEwen Copper. That's my cost base.
Yeah.
We are, how would I put it? When we do internal management calculations, we're looking at a value that ranges from $20 to $50 a share, and we're currently trading at about $9.50 a share.
Okay.
60% of our value is from the copper, and we're trading at a quarter of what BHP and Lundin cut their deal at.
Yep.
And we think we have site advantages and we're bigger. So that's one aspect. We have a portfolio of 6 royalties on non-producing properties at the moment. The largest of that royalty will be the one on Los Azules, 1.25%. And based on the preliminary economic assessment, 27-year production, 375 copper, it would generate over $400 million, just that one royalty.
Over the life of mine?
Over that
Okay.
27 years.
Yeah.
And as I said, I think that's going to go a lot longer than
yeah,
27 years.
Yeah.
And then when we look at our gold assets, we'll be producing about 130,000 to 140,000 ounces of gold this year. And when we compare ourselves to 4 other companies producing about the same amount, there's about $14 of value there.
Okay.
So right now, if you looked at it, based on the implied value of the copper, that's equal to about a $9 value a share. So you're buying McEwen Mining and getting the copper, and the gold and the royalties you get for free.
Yeah.
So.
And I guess obviously as you are now going down this path of sort of updated economics, permits potentially, obviously I think that de-risks massively and I think will give a lot more confidence. In terms of the gold business, obviously you've just given us a bit of a flavour there in terms of the amount of ounces that you're producing
Right.
per year, but when was the latest guidance that you were able to give and what can you sort of tell us about how profitable that business is starting to look now?
It's generating free cash flow. We'll probably generate about 25 million. Our financials are maybe a little confusing because and it's got to do with accounting.
Yeah.
In 2022, we owned more than 50% of McEwen Copper, which holds Los Azules.
Yep.
So there, when you own more than 50%, you consolidate all of the expenses that are being incurred at Los Azules.
Yep.
So we booked a loss of $1.81 a share, or about 81 million.
Right.
And you go, oh, that's awful.
But that's because of all the exploration and development costs.
That's because we
Yeah.
consolidate all the expenses of the subsidiary.
Yeah.
Last October, we, our interest, we did a financing, our interest dropped below 50%. So you deconsolidate and you equity account. And so all of a sudden we have a net income positive
Good.
of $55 million.
Okay, that's a nice turnaround, yeah.
So $1.15 a share.
Yeah.
So it's moving like that. But positive cash flow, we had, at the end of the second quarter, $41 million in cash. We'd reduced our debt from 65 to 40 million.
Amazing.
And production was going up, costs were coming down. And it being a higher cost operation, your profit margins expand a lot faster, greater percentage when the price of gold's running
Yeah.
and the price of copper.
Well, it's the all-time high today, which is good news for you.
It's good.
Yeah. Why don't we talk a little bit about, obviously, what the next couple of years look like for the gold business? Because this is, like you said, a cash-generative business. It's still very important. I know the copper obviously takes a lot of the limelight at the moment, but how have you managed to get down the operational cost, the AISC? What is that sitting at the moment? What's your current plans looking forward to the next 3 years for that business?
Well, let's start with our operations in Timmins.
Yep.
They'll do about 45,000 ounces this year. We're mining one deposit that's about 30 kilometers away from where our mill is. So in a year and a half time, we will stop mining there and we will be mining right at our mill.
Okay.
So there's no transportation cost. Where we're currently mining, it has a horrible stream on it, and we didn't put it on, the company we bought it from.
Yeah.
Anyhow, because of that stream, we're selling 8% of our gold at $600 an ounce.
No, really?
Yeah, I mean,
Who owns that stream?
Sandstorm.
Okay. Oh, good for them.
Yeah. But we won't have it when we move over here in a year and a half.
Yeah.
So no transportation, no stream, the ore is softer so we can process more, and the grade's higher.
Okay.
So, right now we're in the process of driving a ramp down at this place where we're going to be mining in a year and a half. Mm-hmm. And there are 3 areas. There's about, at the moment it's about 50,000 ounces. We can see that moving to about 80,000 4 years out.
Okay.
And then once we go through that, there's about a 6-8 year life there. Then about 30 kilometers away on the earlier property, we have 1.1 million ounces. We put out a press release on that this week.
Yeah.
We have a $19 million exploration program. We've been spending quite heavily there. Moving down to Nevada, our gold bar operation, it had floods in the high desert, which you never think about.
Yeah. Yeah, you wouldn't, yeah.
So it had some natural problems. We just finished buying a small exploration company called Timberline. It's 30 miles away, their property. It's right next to I-80's Ruby Hill property. And it's got 500,000 ounces showing, but we think there's a lot more there. So we have an exploration there and at Gold Bar. We go down to Mexico. We have a property we bought from Argonaut, all the process plant.
Yeah.
And we're looking to reprocess the heaps. And that'll be 6-7 years and low cost. And then assuming the permits and for open pits are allowed in Mexico.
Yeah, fingers crossed. We'll see what happens there.
Then we'd be mining 7-8 years of silver.
Okay.
And then we go down to southern Argentina. We have a 49% interest in a mine called San José. It's operated by Hochschild Mining of Peru.
Yep.
And they're right next door to Cerro Negro, owned by Newmont. It's a high-grade underground gold-silver producer.
So I guess this time, say in 3 years' time, or
We're looking at 200,000 ounces
Okay.
by 2028.
Okay, so that's pretty meaningful.
Yeah, it's a good increase.
Yeah. Okay. Okay. Say for example, we're sitting this time next year. Mm-hmm. What do you want to be able to tell me at Beaver Creek?
Well, we've got a feasibility study out.
Yep.
We're in the market looking to raise a $2.5 billion.
$2.5 billion.
Yes.
Well, most of that with debt, right?
A large part of it.
Yeah.
I don't want to dilute.
No, you don't want to dilute that much, no.
Hopefully, I'll be saying our gold assets are generating nice positive cash flow. And we may have added another gold asset. To me, this is the time one should be buying, and it's the junior space that's been ignored. And there's a number of projects out there with good drill results. They're building attractive resources. And I just think we're in a cycle, we're in a very good part of the gold cycle, and it's running higher.
Oh, so you'll be contributing to some M&A in the industry, potentially?
Probably.
That is music to my ears.
And
That's
then
awesome.
in our copper property, we started exploring around our Los Azules deposit, and 3 kilometers away over a ridge, we found another couple of intrusives with copper oxide and quartz veining, and we think we might have another discovery just next door to us.
Okay.
So I think I'll be telling you that we've gone from 37.6 billion pounds to something bigger than that.
Okay. Not that it needs to be much bigger, but that's still impressive. Yeah. Okay. All right. So really big year for you guys. Feasibility study, potentially some M&A, some good results coming out. Good. Rob, really appreciate your time.
Thank you, Peter.
Thank you.